Hello and welcome to the Sand to Pearls Stock Market Commentary for market week ending Friday, December 20th, 2013. Market breadth. With this past week's market rise, our bull-bear point and figure ratio rose from 1.22 to 1.50, advancing within bullish territory. The total count of securities in bullish or bearish patterns advanced 3% to 2,373. The count of bearish stocks increased 8%, while the count of stocks in bullish patterns increased 12%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 15 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 5 points for the 8th rise in 20 weeks. At a positive 168.90 points, it remains below the November 2011 top and below all 8 other tops above plus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 1 accumulation day and 3 distribution days. Of the other indexes, both the S&P 500 Deposit Receipts and the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, also, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. At Monday, 12/16 close, we received a zero-line reject long entry signal. The next day, the CCI 20 dropped, but stayed above the zero-line reject pivot point, so we stayed in the trade. Now that the CCI 20 is over plus 100, we will exit the trade when the CCI 20 drops below plus 100. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 44 weeks ago, while the daily CCI 20 began a Woody's uptrend 13 weeks ago. And evidently we're getting some snow on the mountains here on the daily CCI 20. The CCI 20 weekly evidently has no snow and continues above plus 100, remaining outside the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, computer hardware continues in the top 5. Brokers has entered the top 5. Oil remains in the bottom 5. Banks has left the bottom 5. Gold and silver has left the top 5 and re-entered the bottom 5. Bearish REITs has entered the bottom 5. Comptech and networkers have left the top 5. Oil services has left the bottom 5. Focus this week. With the Federal Reserve soon to begin tapering, it's time to get an understanding of the economic manipulations that will soon rock our world. The article Hidden Motives Behind the Federal Reserve Taper at www.alt-market.com does an excellent job of this, and we highly recommend the read. Following are a few highlights. If you think that the Fed simply acts on impulsive stupidity or hubris, then you haven't a clue what is going on. If you think the Fed only does what it does in order to hide the numerous negative aspects of our current economy, then you only know half the story. If you think the Fed does not have a plan, then you are sorely mistaken. Another point: the dollar can no longer maintain its petro-currency status or its world reserve status if total centralization under a new global currency is to be achieved. Globalists believe that America must be sacrificed on the altar of, quote, progress, end quote, and diminished into a mere enclave, a feudal colony of a greater global system. The globalists at the Fed are no different. The following point: the Fed exists to destroy the U.S. financial system and the U.S. currency mechanism. That is what they are here for. The next point: the assumption has always been that the Fed wants to keep the system afloat. I submit that things have changed. I submit that the Fed no longer wishes to prop up our fiscal structure, or at least no longer wishes to be seen as propping it up. I submit that the Fed is not pursuing dollar destruction through standard hyperinflation, but rather they are preparing the U.S. for default, which also will result in currency implosion. The next point: tapering seems inconceivable to many, but for the Fed it makes perfect sense if the goal of the globalists is to generate a default scenario while diverting blame. I believe that Americans are being prepared psychologically for just such an event. Already, the White House is warning that government funding will essentially disappear by the end of February. And the final point: the calamity would be blamed on, quote, partisan bickering, end quote, and, quote, government gridlock, end quote, or even the inefficiency of, quote, democracy, end quote. The Fed, with its taper in place and its fake recovery established, would be presented as the only, quote, sane, end quote, institution at America's disposal. Hoping that sheds some light on this subject for you and you are able to make wise decisions. Wise men still seek him. Wishing you true success and, again, a very Merry Christmas with those you love.